What's up, guys? It's Rob here, and Jerome Powell just gave his testimony to the U.S. House of Representatives. He said some very interesting things. You can see the stock markets moving up on this. We are going to go over the key points that he made during this testimony. And before we do, feel free to throw the video a like. That would be much appreciated. So obviously, stocks are performing well on this news. Now, what did Powell say that caused stocks to start moving up? First of all, the main highlight of this meeting is that he confirmed he is going to aim for a 0.25% rate hike at this upcoming March meeting. So previously, people were anticipating potentially 0.5% rate hike. Now it's confirmed to be 0.25%. He also said that he will talk about shrinking the balance sheet at later Fed meetings more heavily than this one. He will start to discuss it with his colleagues, but he's not actually going to have any concrete plans at the time. He also said that if inflation is hotter than expected, then he may, at some point, implement higher than 0.25% rate hikes in the future. So we don't know if this is going to happen yet. He's going to do it based off of new data that's coming in, new inflation data, which, in my opinion, we could expect to come in a little bit hotter than desired because of all the conflict going on in Russia, the rising price of oil, and the ripple effect that that could have. So he also was asked some questions about a Federal Reserve cryptocurrency, essentially, right? A digital currency, a digital dollar. And he said that resources are being spent researching this and doing a cost-benefit analysis of what this digital currency could bring, what it could offer, and what it could cost the country, right? So not too much legwork has actually been done, but they are researching it. They haven't actually started building or implementing anything, though, according to him. So the Fed doesn't deal with sanctions. And what this bullet point means is essentially that, a bunch of people were asking him, what is the Fed going to do about Russia and Ukraine? And he essentially wrote this off. He said that the Fed doesn't do anything with sanctions. They don't have any power there. It's the Treasury's job to deal with sanctions and all of the things really that are related to Russia and Ukraine. There's not too much the Fed can do. So he did comment on that when asked. And he said that markets were looking very strong, that there was no apparent lack of capital in the markets, that liquidity was high, and that markets don't need any more Fed support to continue performing well. So we can expect that the Fed won't be doing any more easy monetary policy, at least for the foreseeable future. And he has recognized during this meeting at several different points that inflation was very high, that it was too high, that it was higher than it should be, and that he knows it's having an extreme impact on everyday people. And so he said, ultimately, the Fed will use all of its tools necessary to achieve price stability. Basically, whatever it has to do to get rid of inflation, that's what he says the Fed is prepared to do. We'll see if that actually ends up being the case. It may not be, but there were some of his colleagues or some of the people in the House who were asking him some tough questions, specifically Mr. Loudermilk, which, I guess that's his name. He said inflation was caused by reckless government spending or stimulus bills, specifically the CARES Act and the other stimulus bills during the pandemic, and that Biden only wants to do more of these. The Build Back Better bill, which was mentioned in the State of the Union address that Biden just delivered yesterday, he says that this Build Back Better bill is going to make inflation even worse. And by he, I mean Mr. Loudermilk thinks that this Build Back Better bill, if it does end up getting passed, will make inflation even worse. Now, it seems unlikely that the Build Back Better bill will actually be passed because Joe Manchin is not on board with it. And Biden, it's interesting, at the State of the Union actually said that our best chance at fighting inflation was the Build Back Better bill. So obviously, there are some core differences in people's beliefs on either side of the aisle. Now, Powell doesn't think that it's likely the Fed will need to provide more liquidity, as we've already talked about. He doesn't think that the markets need any more money in them. He thinks the markets have been pumped full of money by the Fed, and he's very right. However, he also stipulated that he doesn't think that they'll need to provide more liquidity in the situation where Russian banks are unable to pay some of their debts because of the removal of Russian banks from the SWIFT system or other sanctions that are being placed on them. He doesn't think that there's going to be a need for the Fed to intervene in that. And he also doesn't want to stoke inflation even more. So that's another issue. Now, Mr. Scott asked, or rather brought up some very interesting points to Powell, which Powell didn't really have too much to say about. But Mr. Scott said that Russia is producing more than 2/3 of the fertilizer that is exported around the world. And that Russia and Ukraine produce about 25% of the world's wheat and corn that is exported as well. So they are massive producers of both food and fertilizer. So you're seeing a lot of food and fertilizer being produced in Russia and Ukraine, and that those could, if those are disrupted, then there could be massive consequences regarding world hunger, and that potentially someone should be thinking about doing something about that. Now, he thinks that the Fed should start thinking about doing something, and Powell admits that the Fed can't really do anything about that and is going to leave it to Congress. All right. So we do have to worry about the situation where we might have some world food market instability and overall general world stability could be at risk if people start running out of food. That's when things start getting pretty crazy. Now, Mr. Davidson, he challenged the idea that if the dollar was sound money. All right. He doesn't think the dollar is sound money and that it's not a good store of value as more money is being printed and there's no discipline left in the government. He thinks that the government's just printing too much money and the Fed is helping them do it. And a ton of money is being spent, money that the government doesn't have. They're just printing it and spending it. And that means the dollar is no longer a source of store of value. It's no longer sound money, that there's too much spending going on. And Powell thinks that the dollar is sound money. He thinks that there's very little risk to replacing the dollar as the reserve currency and that we'll probably continue using that. I tend to agree. We probably won't replace the dollar as the reserve currency. But if it's a good store of value, no, I don't think it is. I think that we're definitely seeing a lot of inflation. And I tend to think that stocks and assets outperform the dollar pretty much every year. So I don't think it's a great store of value. It's a necessary evil at the moment for transactions. Maybe cryptos will replace it at some point. But Mr. Davidson made a good point. Now, Powell also, throughout this meeting, often said that inflation is mostly due to supply chain issues, not monetary stimulus. That's also just a differing of views, a real disparity between what a lot of people feel is the cause of this inflation. A lot of people think that the inflation is being caused by all of the printing that went on over the past couple of years. Powell says it's mostly due to supply chain issues and stuff on the supply side that have never been cleared up. He doesn't think that that there's too much additional demand. He knows that there's some additional demand, but he doesn't think that the additional demand caused by all the monetary stimulus is the real driver of inflation. He thinks it's mostly on the supply side. And lastly, Mr. Lutkemeier says, what kind of action should we take if China decides to invade Taiwan? All right, that's what he asked Powell. And Powell responded that that's a question for the National Security Council, but that it is a possibility, right? It's a possibility that Powell and the Fed are modeling what might happen in this kind of a scenario to figure out what they would do if China were to invade Taiwan, just to see how they could potentially mitigate some of the damage that could be caused by that. So that's what Powell said at this most recent meeting. If you guys appreciate that, feel free to subscribe to the channel for more breakdowns like this. And other than that, guys, keep in mind none of this is financial advice, and have a great day. I'll see you in the next one. Bye.